question coming to you is, yesterday's session, we did see that profit booking that did come in when it comes to gold, silver, copper, and some rebound again today. What are the trends that you're looking at overall?
Hi, Hiral. So, first of all, season's greetings to you, entire team, and the viewers. And it was the chain reaction of increase in margin in comics, and they have limited the position limit. So, yes, it was a cascading effect of margin calls and position limit. And yes, China, it was on premium of $7 to $8. But today, market is on trading with green signal because 1st of January onwards, China is going to export the ban of silver, or it will be restricted actually. So ultimately, it is going to impact the world supply by 7 to 8%, 8 to 10% actually. So. On every correction, market is ready to go for buy, and this time it is for physical. And many industries, they are directly making agreement directly to mines and the companies for silver availability for entire year or entire 2027, 2026. So there is a rush for physical silver, and because of that, we have seen the impact of margin for one day. It was a sharp fall, and whenever they get the sharp fall, we have seen that prices again moved up. So it was a healthy correction, and with some correction of say 8 to 10% in silver, 4 to 5% in gold, and 5 to 6% in base metal, again buying emerged. So this is the physical scarcity which is giving impact on the prices. On every dip, they are ready to buy, because if we consider the supply deficit, it is from 2020. It is not from 2025. It is from 2020. If we connect with the data, Shanghai gold, the inventory is down by 70% if we calculate it from 2020. For comics, it is again down by 70%, and for LBMA, it is down by 40%. In case of silver, it is happening in base metal as well, and the demand is rising, and there is no substitute of silver for many uses. So, no substitute availability for silver or some metals. It is also giving pressure to the physical demand of metal. So, every correction is a very good buy for industry, and from industry to country to government, they are all they are behind of silver, and even Indian government like RBI, they will start using silver as collateral. So now from industrial metals, from base bullion category, now it is serving the role of strategic metal as well and critical minerals. So all giving impact to the silver physical market. And that's why I'm thinking that the China premium will remain a stay, because China need physical silver, not paper silver. They want it for industrial production. So yes, physical silver premium will stay in China, and it comics will be on the discount of around 4 to 5%. Earlier it was 1 to 2%. Now it is 7 to 8%. Even if it get minimized, it should be around 4 to 5%.
Okay, so that's with regards to where silver goes. How are you looking at copper as well? Because a couple of triggers which are fundamental when it comes to copper. You're talking about the unplanned mine outages that are happening in Chile. Trump is planning to revisit tariffs on primary copper when it comes to 2026. So that is something which is uncertain as well. And the unprecedented pressure we are looking at in terms of the world's smelters. Now, all of this is becoming a concern when it comes to copper, creating some bit of uncertainty. What is that telling you when it comes to copper? And what should that trade look like according to you if someone wants to look at copper?
Yeah, Hiral. Some unique triggers we have seen in 2025, and we are moving in 2026 with the same triggers, plus some positive triggers as well. Because in 2026 we can see aggressive rate cut. Again, it is a positive for copper. Grasberg mines, which is providing 3% of total world supply, it is going to remain shut in entire 2026. We are fearing that. Third thing is that copper inventories, it is depleting in LME as well as in Shanghai, and these things are giving acute pressure on the physical availability. And if we consider what is happening in metals, including silver, from last 2 decades, there is very less exploration and mining production. And mining production, it has been reduced by 3 to 5% in every metals, whether we consider silver, or is it lead, or is it copper. So mining production is declining. The demand is increasing. Clean energy, green energy, photovoltaic. These are new sectors where they are consuming all the base metals and critical minerals. So yes, again, there is a deficit year for copper, and the stock is depleting down, and the scenario will remain the same in 2026. One thing is that, which I am eyeing for, this is the LME banned stocks of Russia. If it get released in the market, open market, that it can give some kind of sigh of relief to the metal, like consumer of this metals. Otherwise, it will be again a year of scarcity for copper, and copper will be the new silver, not silver, new gold for this counter.